Hey guys, this is GD back again. Today I will discuss my analysis for Bank of America stock. Last week when I did a video on American Express, I did mention that I'm extremely bullish on financial sector, and as you saw this week, actually the financials went up, right? I mean, all the bank stocks, even Bank of America, went up $2, like $26, right? And American Express went up to $99. I think the mode of market, mood, I would say, the mood of the market is going to shift from growth to value, in upcoming years, and that's kind of I think started to happen yesterday onwards. We are very early in the cycle of shifting from growth to value. So if you see all the growth stocks, those stocks have kind of gone down a lot. Some of the tech stocks like Alteryx, LVGO, some of the stocks have gone down a lot, like 20-30% correction it happened. So definitely it's shifting. The market mood is going to shift to the value stocks, and financial is kind of, I think, very undervalued right now and very cheap valuations. Let's start with the Bank of America stock analysis. And before that, guys, I request you to please subscribe to my channel and like my videos. That encourages me a lot. As you have seen, the videos I uploaded on many stocks, those stocks have gone up a lot. Right, I mean, those who are listening to this video first time, I mean, have not looked at my other videos, go and look at my Pinterest video, my Alibaba video, my American Express video, my Etsy video. All of them have given a blockbuster returns. So I'm doing a lot of analysis, doing a lot of fundamental technical analysis from my side, and then presenting my videos to you guys, right? A lot of effort goes in. I sometimes be awake till night after my work to do this analysis and research and put down the points to make this video. So I request you guys to please subscribe to my channel and like my videos. So let's start with Bank of America stock. So some of the key triggers and positives, right? I mean, very strong bank and great CEO. It's a pretty strong bank. It has survived the financial crisis and another crisis, and it's a very retail oriented bank, right? I mean, most of us, many maximum people have actually in America has account with like three of the financial institution like Wells Fargo, Bank of America, and JP Morgan, right? I mean, those are three are big banks. Wells Fargo is having some issues, but JP Morgan and Bank of America very strong. Especially Bank of America, they are upgrading their systems with a lot of digital capabilities, and a very strong bank, and I like the CEO as well. So that's first trigger point. A great management is what I want to call out. The valuation wise, right? The valuation wise, Bank of America is very cheap. It's a so S&P 500 valuation, if you see, right, it's trading at a forward multiple of 20 to 25 times, whereas all the big banks, right, they're kind of trading at a very cheap valuation. Bank of America is trading at 8 times valuation, 2020 valuation. Why I'm saying 8 times valuation, and that to 2021 earnings? Because if you remember, like I mentioned that in my previous videos that I follow the guru called Bill Nigren. He has done a complete broadcast on this actually for Bank of America, and he explained there, right? I mean, why he is also very bullish on this stock, because let's say 2020 earnings you need to write off. Actually, it's not even getting written off. If you see the Bank of America stock, Bank of America has produced a positive earnings for 2020. But still, let's say 2020, you just wipe off all the earnings, and let's say don't look at the valuation of 2020. If you look at the valuation of 2021, and let's say economy recovers, and which is what is happening, right? I mean, if you look at yesterday's job numbers, then economy is coming back on track. So let's say by 2021, in the year 2021, they're able to produce the same earnings as they produced in a pre-COVID level, right, which was like $3 a share. So if by 2021 end, if they are able to produce $3 a share, the share is trading at like $26, right? So it makes it like 8 times earnings, and S&P 500 is 25 times earnings. Even if S&P 500 corrects by 20%, it's going to come at 20 times earnings. I don't think so. As I mean, 20% is like a big correction, right? I don't think it's going to happen 20% correction on S&P 500. But let's see, even if it corrects, then also Bank of America is trading at half of the multiple of S&P 500, and I don't think so. It's going to go lower than that. So if you say it's trading very cheap, right? So if you take $3 of earnings, right, and multiply by 12, right, it will come to $36. So I do feel that market will not give it a multiple of 8 times. It will give at least a multiple of 12 times, which is still half of S&P 500 multiple, and then you arrive at a price target of $36 in next 2 years. I'm not so by 2022, middle of 2022, I would say it should trade at around $36, because if the value outperforms growth, which has happened in past recessions, it can go even higher than this, because today if you see the energy sector, right, energy sector is a dividend play, and those stocks are trading at 20 times earnings. So if you give 20 times earnings, then it's going to imagine, like, how much is going to trade. It's going to trade $60, but we are not giving 20 times earnings. We are conservative. We're going to give 12 times earnings, so it's going to be $36, right? And see, this Bank of America dividend is going to be very safe. That's my third point. Its payout ratio is 46% of profits, right? This is very conservative, because so if they are making $1 of earnings, they are paying out 46 cents out of that, and they are able to generate these profits even in this recession period, so dividend is not going to get cut for sure. If you go and look at Bank of America, so I usually look at Seeking Alpha. It's a very good site to look at the dividends, right? So if you see, the dividend yield is 2.76%. Excuse me. So I mean, compare this to 10-year treasury, right? It's yielding 0.6%, and this is giving you 2.76% dividend yield, guys. So how much? It is giving 4 times than what you can earn on treasury, and this is very safe, because the payout ratio is 46%. Right, as I mentioned, and it is actually growing its dividend, if you see, right? I mean, because of this pandemic, it's keeping the dividend same, but it's growing its dividend. So dividend growth has been 40% year over year. So if you see the dividend history, right, it's increasing its dividend year over year. So if you see, right, in 19 it paid out 15 cents, in 20 it paid out 18 cents, and 2020 it's going with 18 cents. In 18 it paid out 12 cents, earlier 7.7 cents. So it's continuously increasing its dividend, and if it's going to generate more profits, the dividend is going to increase. Actually, it's not going to go down, because with this bad earnings, also the wiped out earnings, right, it is able to make profit, but then also it is able to give out the dividend. So dividend is not going to get cut. The dividend is very safe. And so dividend yield is like 3%, 2.7%. I think it's a very good play, on a dividend side. So if you see the energy sector, right, it's giving this dividend same as like 3.5-4%. Okay, but they are trading at 20% yield. I mean 20 times P. So I mean, the Bill Nigran mentions that they are going to basically trade like energy sector, right? Because the energy sector also was very cheap few years back, but for dividend the people are buying the energy stock or keeping the energy stock. So same is going to happen with financials, right? And if the economy improves a lot, it's going to even increase. So I think that's why this you can consider this as a dividend play, and may not be a growth play but dividend play. But I feel it's a both, because if the price goes from 26 to 36, it's definitely a growth play. If it in 2 years it increases by, let's say, 40% upside, per year is given 20% upside, and 3% dividend yield. So basically you're staring at 23% year over year, your share price appreciation, right, or overall appreciation. So I think it's very good. It's amazing. It's just negative sentiment is what is keeping the price down. Buybacks will resume once the recession is over, which will further reduce the share count, right? So one other thing is like, even buyback is going to is going to basically increase for this company, right? If you see the Bank of America shares outstanding, I use this macro trend site. It's a very good site. If you want to look at the shares outstanding. So if you see, right, it is reducing its share count from 2%, 5%, 8%, right? So if you see, right, it had 10 billion shares outstanding. It is reducing its share count by 8% every year, right? So this is a very good sign. This is what Buffett likes, right? I mean, Buffett loves businesses which pays out dividend, which reduces the share count, right? Same is the case with American Express. If you see, right, the share count is decreasing year by year. Right now, Fed has asked them to stop buyback because of this environment. But once the economy improves, definitely Fed will look at the liquidity position and allow them buyback again. So even buyback will increase, and that will even reduce the share count and drive the share price. Guru, right? This is very important. Guru Warren Buffett is buying. He owns 12% of the company. Before pandemic, he owned 10%. He bought 2%, and and has been buying very aggressively at $24 per share price. Buffett is allowed to increase his stake up to 20% if he wants to. He doesn't necessarily will, but he can get his stake updated till 25%. So if you see this article, right, Warren Buffett, Berkshire Hathaway is allowed to double its Bank of America stake to almost 25%. So and then about 1.7 billion, the billionaire investor company bought about $1.7 billion of the bank stock in the last 2 weeks of July, lifting its ownership to 11.8%. So guys, I will give you my take on this. I think Buffett will go very aggressively on this stock because he sees that this is very cheap stock and margin of safety is very high. So I do feel that he is going to go up till maybe 18-19%, up to 20% maybe, because he has all this cash and he doesn't. The market is so overvalued. He doesn't have this cash to invest anywhere. He's getting dividends from so many companies like Apple and other companies, that he will invest somewhere, right? I mean, and this is a value play. So I think he's going to go all in on Bank of America, and I feel very happy about this news, guys, because I am a big Buffett fan, and all the videos I tell I tell my price, right, the price at which whether I bought a stock or not. So I did buy this stock on an average price of $22 actually, so even before Buffett bought, I bought at $22. Some I bought at $20 when that March fall happened, right, and then some I bought at $24. So my average price is between $22 to $23. So I am actually below what Buffett is buying, below that price, and I feel very proud about it because I spotted this opportunity, I started buying, and then Buffett kind of put the confirmation on my trade, right? And when your guru kind of puts a confirmation on your trade, you feel so happy about it, that you spotted the opportunity along with your guru, and he started buying. So I feel very good about this news. I do feel he's going to go all in, because if you have seen his history, right, be it a Coca-Cola, be it Apple, he has, once he started buying like this aggressively, he goes all in. He increases his stake like anything, so that's another good news. Even if it doesn't happen, 12% is not is very good stake. It's his second highest stake after Apple. So just think about it, right? I mean, how much confidence he has in this company, right? I mean, so that kind of gives very a lot of confidence, right? As economy recovers, the profit will normalize pre-COVID levels, and chances of happening this are bright since unemployment reduced further as per this week's data. Okay, guys. So if you have looked at unemployment data this week that came out just yesterday on Friday, right? So what happened is, like, unemployment is back to like 10% or something, right? I mean, it was when the COVID happened, it shot up to like 15%, I think. but it's reducing, right? So that's a very good news for economy related sectors like, like banks, right? I mean, as the economy improves and more people get job, the banking sector improves, right? Directly connected to economy. So I think it's a very healthy sign, and very good news for the banking sector, right? So that's I think a good news. So all these factors, right, is basically going to support this price. So I think the negatives for the banks have bottomed out, right? I mean, even if the market correction has to happen, I don't think Bank of America will fall below $22. Even if it falls, I think Buffett will come and buy it. And other gurus, right? They are going to come and buy it, like Bill Nigran, because definitely this is very clear cut short at a good valuation, which is not going to go. So margin of safety, right? All these gurus which follow value investing look at margin of safety, right? And I don't think so. There are very few stock in this market which provides a margin of safety, and that's banking sector, and Bank of America is one of them. So I do feel that the stock has bottomed out. It can go down definitely. Market goes down, but it will not go down below $22. So that's about the job data. The final is financial crisis, right? So this is something that I kind of came to know a couple of weeks back. That what has happened, like what happened, what's the difference between the money printing that has happened from Fed this time and 2008, right? And why inflation did not happen in last decade, right? So there is a reason for that, because when the money printing happens, right, the inflation actually should increase. If you have to look at the history, so in 2008 and 9 it was a financial crisis, right? So all the banks were suffering. This is the health crisis. So in that crisis, whatever Fed money printing happened, like I think it was around $1 trillion, 800 billion to $1 trillion, all went into banks balance sheet. Actually, it did not go out to the main street. So main street means like it did not go out to the people like us. It went into banks balance sheet. So they improved the balance sheet, their liquidity position has improved, and they have not lent this money out to the retail investor. Like let's say Bank of America got maybe let's say $50 billion of liquidity. Out of that, it has actually lent out only $15 billion. So it's maybe 25 to 30% only they lent it out. They have not lent it out the whole amount. So that's why their balance sheet right now, if you look at it, it's very strong. And this pandemic driven money printing that has happened this time, right? Fed has printed like $3 trillion that has actually gone into people's pocket, right? They sent out the stimulus check. They gave the money to business, small business loan through PPP loans, right? So if that happens, right, the inflation will come. It will come. It might not come in like let's say 1 or 2 years, but it will come in 3, 4, 5 years. Because the money has gone into customers' pocket, right? So they will spend, right? I mean, when everybody gets money, they'll go and buy the things, and that hits up the prices, right? That will come up, that will put the inflation up, right? So that's actually another good news for banks, because if the inflation brings up like in 4 or 5 years, right, picks up, Fed will increase the rates after 3 years. They have come and said they are going to increase the rates for 2 years. I think that will happen. Like they will not increase the rates for 2 years because they will have the economy back to the pre-COVID level. And after that, if the inflation picks up, right, and if it goes above their target, so their target of inflation is 2 to 3%, I think. So if the inflation runs 4, 5, 6%, they will come and increase the rates. And if they increase the rates, right, I mean, interest rates will go up. And if interest goes up, who benefits? Banking sector benefits, right? If the interest rate right now, because of interest rate are so down, banking is going down, the profits are going down. If interest rate increases, the profits will go up. So actually banking sector is a long value play, I would say. So it can reach $36 in next 2 years, but I would be a long-term believer or long-term holder of this stock, because if the inflation picks up, interest rate picks up, the stocks are not going to trade at 12 times earnings. They are going to trade at like 15, 20 times earnings. So it's going to be earning multiple expansion, as well as it's going to be a profit expansion. So I think it's a very good stock to own right now. I feel that if the stock goes below $24, $20, I'll be a buyer. I'll dollar cost average and buy slowly, right? I mean, but margin of safety wise, this stock is very good, and I do feel it's going to go to $36 in next 2 years. So that's the analysis from my side, guys. I would say that do your own research as well. These are the pointers which I feel that I present to you guys. I feel that the stocks which are undervalued and has a significant potential, right? So that's it from my side for this for this video, guys. Again, I request you guys to please subscribe to my channel, like my videos. That will give me a lot of encouragement to produce a lot of videos. So that's why I kind of highly encourage you guys, please go and subscribe to my channel and like my videos. Thank you, guys.